Hi there, welcome to Kneppy Invest, and welcome to three stocks on the ASX that released interesting or intriguing Appendix 4Cs for the June quarter 2025. I am recording this video on the 1st of August, intending to release it sometime in September, and I do have quite a few of these videos to get through. In fact, I think I added it up, and it was about 20 or 22, something like that. So I've already done 6. Or is this my 6th? I can't remember right now, but I will be completing all these videos within the next few weeks, intending to to release these videos by mid-October, because a lot of these companies, if not all these companies, will be releasing their September quarter results in October. And I think these videos could be a good gauge, good maybe introduction to some companies that might be close to a very important inflection point that all companies are trying, well, not all companies, but typically small unprofitable companies are trying to find or achieve. Okay, so the three companies I'll be focusing on in this video include Global Health, and then we'll have a look at MyEco Group. They used to be called Secos, S-E-C-O-S, then they changed their name. And then Pentanet, and I am a shareholder of Pentanet, and that's in my super. So I'm not trading this company. This is more of a long-term hold for me. And what I'll do in this video, I'll briefly go through what these companies do, and then we'll have a look at their Appendix 4C, have a look at the reason why I've included this company or these companies in this particular video, and then we'll have a look at the cash receipts history and then the chart. Okay, Global Health. Interesting enough, I first discovered this company back in 2013 or 14 because there was a lot of hype in this company. In fact, the share price, I remember, went bananas for a little bit of time. I have no doubt the share price is significantly lower than right now than it was back then. In fact, I remember the share price might have got close to $1. Current share price is about 7.6 cents. Other than that, I can't tell you much about Global Health. I've never had a close look at this company. Something to do with health because it's in the name, Global Health, but exactly what they do, I have no idea. But according to their website, they optimize workflows, enhances productivity, and drives improved patient outcomes through innovative digital healthcare solutions across Australia. So is that software or other stuff? For instance, they have quite a few brands here, include Mastercare, Referral Net, Primary Clinic, Lifecard, Hot Health. Is it like tech or is it software? There we go. Software solutions for Australian healthcare providers. That's Mastercare. Quite a few products there. So it seems like this company has a lot going on, but it's still fairly small. And when I say fairly small, I'm assuming, I'm just going to guess, markup. No, I don't have to guess anymore. Markup is only 4.45 million. So this is a very small company. So I mentioned in another video that on the last day of the quarter, reporting month, that many of these many crappy small companies on the ASX that are going nowhere release their Appendix 4C. And to be honest with you, most often than not, I'd probably include that company within that list. This company has gone nowhere since I first discovered them, and I'm not sure they'll go anywhere in the next 10 years. Anyway, so market cap is 4.45 million. But in saying that, if this company can show the market, if this company can prove their business model and they can start growing, sometimes it takes a company a long time to start to get momentum in their business. This company might be a nice little buy. Might be. We'll say that. Okay, so now on to the company's Appendix 4C. So share price is 7.6 cents. At least it's not 0.7 cents. And now on to their Appendix 4C. Another thing you might just notice here, no trading today. So there's a chance that this company is liquidly traded. Yeah, not a lot of depth in the buyers and sellers. If you have a look at trade history, yeah, there is trading most days, but some of those days, very little trading. So that can be a turnoff for some investors. And because it is illiquidly traded, sometimes you'll see the share price jump up or jump down a fair bit, like over 10% or down 10%. In fact, there was one day share price was up 33% after being down almost 10% the previous day. Okay, so you're going to see that sort of thing in this sort of company. But now on to their Appendix 4C. And why I've, bad gateway. That's not good. Oh, still saying bad gateway. I might have to go to Market Index. Thank you, Market Index, for providing me with an alternative. There you go. No bad gateway with market index. Okay, so of course, the first thing I always look at is just the cash flow of the company and whether the company is operating cash flow positive or not. Receipts to customers, $2.8 million, $8.5 million for the year. And straight away, because I can do simple maths in my head, it's pretty obvious that this particular quarter receipts were significantly higher than the rest of the year. Maybe not significantly higher, but they were higher. Now, that could be just a one-off, or that could be a trend. The other thing I noticed is that product manufacturing operating costs were quite low this quarter compared to the rest of the year, about $1 million each quarter for the first 3 quarters and only 764. That could be just a one-off. And it does look like staff costs about what you would expect. But the company was operating cash flow positive $397,000 in this quarter. Now, they were not operating cash flow positive for the year, and that also includes government grants and tax incentives, but they were operating cash flow positive for this particular quarter, hence why I'm doing this video. Were they free cash flow positive? Well, they don't spend much money investing or in financing activities, so I don't really look at borrowings, but just because we can see some money in that borrowings, we do know they have a little bit of debt. Now, sometimes I completely ignore how much cash a company has. This company has about $1.4 million of cash, but that includes borrowings. So let's have a look at section 7. Have $1.569 million in debt, $235,000 in unused financing facilities. Sometimes I do like to have a look at section 7.6, the particulars of their debt. For instance, there's one here, a convertible note, interest rate 12% per annum with a maturity date June 2027, credit card facility with ANZ, so you can do that yourself. So actually quite a few financing facilities there. Okay, so overall, an okay quarter from Global Health, but the question becomes, it was a good quarter, but what about the rest of the year? So let's have a look at this company's receipts history. And this only goes back to 2021. So I think before that, they didn't or weren't required to release Appendix 4C. And if we have a look at the last 4 years, 4 and a bit years, receipts are growing. There is a trend there, albeit very slowly. There is a trend. And receipts can be quite lumpy as well. Now, this was not a record quarter for the company. So they have achieved $3 million receipts in a couple of quarters, but the trend is still up. So we do see a trend here. And I just need to see this company reach that inflection point and remain at that inflection point. I don't want to see one really good quarter from the company and then 3 bad quarters. So I want to see momentum being continued in all quarters. Anyway, so let's have a look at the chart for Global Health. And if we have a look at the weekly chart for Global Health, you see, well, there was actually a bit of interest in this company back in 2020, 2021. Share price went to 75 cents, but I don't remember that. I remember back in, it was 2014. It's 2014, there was a lot of interest in this company back then. Share price went bananas for a period of time. In fact, the share price went from like 5 cents to 75 cents. And I don't remember what happened or why, but that interest died away and I didn't really follow that company. And then all of a sudden, some more interest. And so just by this weekly chart, you can see that, this company hasn't really gone anywhere over the past 10 years. And if it had gone somewhere, the share price would be significantly higher than it is now. In fact, if you have a look at the weekly chart, share price has been in a well-defined downtrend for a while and has hit a low, a long-term low. We're talking about a decade low, and that decade low was at 5 cents, which was reached in June, not that long ago. And the weekly chart or the daily chart, there's nothing much of interest here. We did see a bit of volume coming in, a little spike in volume on the 28th of July, and we saw a bit of volume coming in last July as well. But also, I can just see that there is many days where there's no trading in this company, just based off the chart. Okay, so that's Global Health. Not much interest for me just now. I'd need to see further signs this company can get to that inflection point and stay above that inflection point. That's very important. Okay, on to the next company, which is called MyEco Group. Used to be called Secos, S-E-C-O-S. Then they changed the name because maybe MyEco Group sounds better. I have no idea. The one thing I know about MyEco Group is they sell environmentally friendly bags or something like that. And I'm pretty sure they sell them to Woolworths and Coles, something like that, making your everyday sustainable. If we have a look at their brands, they use Cardia Bioplastics and MyEco World. So Cardio Bioplastics, 2000, it's been around for a while. global pioneer in sustainable material innovation. MyEco World, been around since 2020. Compostable and recyclable products for everyday use, from kitchen and garbage bags to pet poop bags. MyEco World products are thoughtfully crafted. There you go. So they make that sort of thing. And I'm pretty sure you can buy their bags in Woolworths. I'm pretty sure. Anyway, that's what they do. I'll be honest with you, I don't really follow this company all too closely. Yeah, that's what I'm going to say about MyEco Group, not because of what they do, but for other reasons. So this company is fairly small. I'm going to say $30 million market cap, maybe. Oh, way off. $9 million market. You can see that I don't follow this company all too closely. Share price is 1.5 cents. Currently, MyEco Group, 1.5 cents. So it is towards the price point where I don't like it. And there's a chance the share price might drop below that. And again, no trading today. No trading at all today for MyEco Group. So maybe shares in this company are illiquidly traded as well. And we can see some days where, yeah, trading is fairly light. So another case where I think not for me, just based off liquidity and a few other reasons as well. Okay, so let's have a look at this company's Appendix 4C. They also have succession plan for the CEO. There you go. Okay, so the company released their Appendix 4C on the 28th of July. And I don't think the company was operating cash flow positive. No, they were not, but they're close. So I thought just because they're close, I'd look at this company for the first time in many, many years, if ever. Receipts customers 4.4 million and operating cash flow negative 208,000. Now they were operating cash flow negative by $3.1 million for the year. So there is a chance that maybe things are starting to turn positive for the company. The other thing I should point out, receipts for the year 18.3 million. So that means that this achievement of becoming nearly operating cash flow positive wasn't based on, or wasn't on the back of increasing their receipts. It looks like it was on the back of decreasing costs. In fact, product manufacturing operating costs down, $14.3 million for the year, $2.9 million for the quarter. Looks like also that staff costs were down, admin costs down, advertising, marketing down. No, I don't like that. That's not a big fan. I like to see a company reach the inflection point by increasing their receipts at a greater rate than their spending. Looks like MyEco Group has reached that point by decreasing their spending, and their receipts have gone down along with it. So not the trajectory I like to see for a company that I would want to invest in for the long term. Anyway, looks like they got $1.6 million in convertible debt securities. How much cash they have on hand? 3.6 million, so enough cash, I suppose. Any debt? No debt, only unused financing facilities. Okay, now on to the cash receipts history, and I have a feeling this is not going to be my favorite. This is not going to be my favorite chart or graph, whatever you want to call it. Okay, so let's have a look. We'll have a look at MyEco Group. And no, it's not. In fact, I started following this company in 2016, so almost 10 years. And the company has never given me a reason to take a closer look. Now, from 2016 all the way through to 2022, it looked okay. Receipts were growing. In fact, receipts got to a high of $8.9 million in the June quarter 2021, so 4 years ago. And that was it. And since then, receipts have been dropping. In fact, receipts have halved on a quarterly basis. So it looks like their products are not doing well. They're not really selling. And this is exactly the opposite of what I want to see. I want to see receipts. I would have preferred receipts to have grown from 4.4 million to 8.9 million. That means there is want of their product or services. And at this point in time, can't really say that for MyEco Group. So maybe they're selling something that's going to be beneficial for the world, but they still have to be profitable, still have to provide something that people will want over the long term. So not much to like here for MyEco Group. So am I sort of regretting including this company in this list? Not really, because I've had a closer look at the company, and now I can put this company away for the next 5 years and have a look at this company again in 2030. Yes, I did have to do a little bit of maths there. Now onto the chart for MyEco Group. I'm expecting this is not going to be a best looking chart. I have a feeling this company, when they'll call to CCOS, would have been about 10 cents. Weekly chart, first of all. Well, way higher than that. It got to 36 cents back in 2021. So there was a lot of interest in this company. Although I would say back then there was a lot of interest in really crappy companies. If you were just any crappy company on the ASX, there was some interest in you. Anyway, if we go all the way back to 2015, there must have been a backdoor listing or something. I have no idea. But that was the only period, 2021, where there was interest in this company. And actually, that does align with the receipts getting up to a record of 8.8, 8.9 million. So I suppose there was interest in the market just because receipts were growing. But since then, receipts have been dropping and the share price has dropped like a rock. In fact, the share price has gone down, was it 95%? It's gone from 38 cents down to 1.5 cents. So that's the weekly chart. And I would say the daily chart is a big muh. A big muh. Now, the share price did get below 1 cent back in middle of June and has rebounded. I suppose that's going for it, but not a chart I like at all. Okay, now on to Pentanet, which is a company I own. This is an internet provider. I think they do a little bit more of that, primarily, if not completely, located in, or they provide the services in West Australia or Perth. In fact, they mentioned that on the website here, I think. Why switch to Pentanet? We're 100% Perth locals. Penta spec service, only a call away, blah, blah, blah. So if you live in Perth, maybe you can get the services of Pentanet. Save $180 over 6 months of fixed wireless. There you go. Anyway, so that is Pentanet. And I'm pretty sure they have talked about expanding. I could be wrong there. Anyway, let's have a look at Pentanet's Appendix 4C. Now, when we have a look at the cash receipts history for share price down 13.8%. Now, they did release their Appendix 4C on the 29th of July, and the market didn't like it. Share price down 9% on that day. Now, again, I would say the company I wouldn't say it's liquidly traded. And you can see share price is currently 2.5 cents, and we have buyers at 2.7, 2.6. So in the next trade, the share price will jump back up. So that is a problem with these sort of companies. And you can see on the seller side, we have 2.83 to 3.4. So all it needs is one person to really want to buy some shares, like 1 million shares, and the share price will increase 50%. Anyway, so you can see the course of sales. Looks like someone dumped shares on the market. Oh, not really yet. Well, maybe not. But anyway, so that is one of the problems with these sort of companies is you can see the share price move around a fair bit on just noise. Okay, so let's have a look at their Appendix 4C. And if the share price dropped by 9%, why am I talking about this company? Well, the company is still operating cash flow positive. So $5.9 million of receipts, operating cash flow positive $396,000. Now for the year, operating cash flow positive $1.382 million. Now the company is not free cash flow positive. And the reason behind that is they do spend a little bit of money in capital expenditure. And the whole definition of free cash flow is operating cash flow minus capital expenditure. And that's the true definition, the technical definition of free cash flow. So if you do that for Pentanet, they are not free cash flow positive. They are operating cash flow positive, but not free cash flow positive. Now, I'll show you the cash receipts history, and that's the reason why I'm interested in this company. It reminds me of another company. Enough cash on hand, unless they really start burning cash, and a little bit debt. A little bit debt, according to this, $2.1 million debt. Although they did not fill in section 7.4. They should have. That should be 2.103 million, because 2.1 million plus 6.6 million equals loan facility is 8.75 million. So they did miss something right there, but I don't think the ASX cares. Anyway, so let's have a look at the cash receipts history for Pentanet. Good thing is I can just move across. Oh, wait there. I thought I could just move across from the last company I did. Obviously not. Oh, now it's Global Health. I could just move across from. I do like to. Anyway, there is one thing I like about this cash receipts history is there's much less lumpiness, and there is a reason behind that. I have talked about some investors prefer companies who have recurring revenue because you can sort of do better forecasts. If a company has recurring revenue, your models are much easier to do compared to a company that has really lumpy cash receipts. And this really reminds me of MyNet Phone, different companies, but when I started following MyNet Phone, maybe 2011, they had a very similar increase in cash receipts. And then they hit that inflection point, and then all of a sudden, MyNet phone just went ballistic. And so Pentanet sort of reminds me of that. And when I say that, it's just the cash receipts history, a nice, gradual, slow increase in cash receipts. And MyNet phone had the same thing. Every single quarter, it was up like $100,000 every single quarter. And then they hit the inflection point. So we see the same thing with Pentanet. And the main reason behind that is if you think of the internet, they have a little bit of churn, not a lot of churn, have a little bit of churn, but we just see this steady increase in cash receipts, which is one of the reasons I do like Pentanet. And the other reason I like Pentanet is it's not that expensive. So market cap of 15 million, 10.83 million. So it's not that expensive for a company that is operating cash flow positive and has a potential to significantly grow their receipts and their revenue in the future. So there's not much risk, in my opinion, for Pentanet, particularly if they start expanding to the rest of Australia. Okay, let's have a look at the chart. Now, there has been interest in this company recently because they have hit or gone very close to an inflection point. Now, apart from this particular quarter, the market didn't like it. So there was an interest. The first quarter where they really hit that inflection point was last January. So they released a really good Appendix 4C on the 22nd of January. Share price popped up 67%. And we can see, even though the company is in a much better spot right now, the share price actually dropped below where the share price was below or before that little jump. So even though I think the company has hit that inflection point, by the way, that big jump in share price back in March 2024, I'm pretty sure that was a deal or some sort of relationship with NVIDIA. But anyway, so I do think the company is moving in the right direction, but the market isn't quite there yet with Pentanet. So this is a case where I did get in a little bit earlier in anticipation that eventually the market will become a little bit more aware of this company. Now, what they need to do is to become free cash flow and operating cash flow positive on a continuing basis. They've hit the operating cash flow. They need free cash flow and then profitability as well. So they're still probably a little bit away from that. Anyway, so that is it for this particular look at 3 interesting or intriguing Appendix 4Cs for the June quarter. Now, Global Health and MyEco Group, I don't have much interest in those companies. And Pentanet, I do have a small position. So a little bit more interested in Pentanet. And the main reason behind that is they are growing, nice growth in receipts. Maybe not nice, but nice recurring revenue. And I think the company is not that expensive either. In fact, I could say it's even cheap. Okay, that's all I have for this particular video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.